I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen. His website is thegoldandoilguy.com. Welcome to the show, Chris.
Thanks for having me, Jim.
You said the stock market in the U.S. showing 3 signs that you should pay a lot of attention to. What are they?
Yeah, we've talked about this a few times in the past, but we've never really touched on kind of how these different leading indicators are kind of pointing to a lower equities market. And if we follow the weekly charts of the U.S. stock markets, we can see that we've had a major break to the downside in August, and we've seen the markets have this incredible rally and recovery back up to the recent highs. But when you look at it from a technical standpoint, a lot of damage has been done because of that break. And what happens when the market breaks down below a critical support level? When it rallies back up to test that level, it's going to act as resistance. It'll get stuck underneath that previous high, and that's right where the markets are trading right now. Now, if we were to look back about a year, we saw the Russell 2000 in March of 2014. We saw the Russell 2000 start to show heavy distribution. It started to underperform the market. And that's one of the first leading indicators that big money investors are slowly moving out of the equities market. They're getting out of their highly leveraged speculative plays, anticipating that the broad market is going to break down over the next year or so as things unfold. So it takes the big players in the stock market a lot of time to unwind their long positions. You can't just dump millions of shares of these thinly traded companies. They have to slowly release them to the public and unload them. So we've seen about a year and a half of the Russell 2000 struggling and underperforming, and that's a really bearish sign. And in November of 2014, we saw, about a year ago, we saw the transportation index top out. They're also a critical leading indicator. They're the ones who are kind of telling us if there's a lot of product being shipped around the world, and of course that's declined drastically, meaning that sales are slowing, and they're the first area to get hit when the economy starts to slow down. And in March of this year, just about 6-7 months ago, we saw the retail sector top out and have a pretty good decline, and it's got some very bearish patterns pointing to lower prices. So we're starting to see that trickle effect from speculative money coming out of the small caps to the transportation slowing, saying their sales are slowing, to now the retail are slowing. Of course, we are coming into the holiday season. There will be a bump in retail sales and probably retail stocks. And of course, we had great job numbers last week, but this is the time of year we always get those kind of good numbers. The big picture, stepping back, all the signs are pointing to this is just going to be a holiday rally that we've experienced. Going to see some strength into Christmas, almost like we always do with equities, but everything else is pointing to kind of all hell breaking loose in the stock market once the New Year's comes. So it's going to be really interesting to watch this unfold.
The last time you'll say Happy New Year is on New Year's Eve?
Yeah, it could be. It could be for equity investors who are all long, for sure. It could be a extremely ugly 2016 for the equities market.
The International Energy Agency, IEA, says it's bearish on oil, bullish on gas, and fatalistic on coal. Bearish on oil, good outlook?
I think so. I think we're going to see continued weakness here in oil. We're just seeing some really ugly price action, and I think we're going to see the U.S. dollar continue to strengthen, and that's going to put more pressure on crude. And, crude oil is down big today. It's down it was almost 3.5% down at the bottom today, and it continues to sell off here. So it's, I think we could see $30 a barrel. We'll get to the lower end of the $30 a barrel over the next month or two here.
Bullish on gas. Is natural gas finally stabilized? Maybe go up?
Yeah, I've been watching natural gas for a long time, waiting for this kind of the sell-off that started in early 2014. We had that big spike there last winter, and or 2 winters ago, and we're just kind of waiting for this market to bottom. But overall, I feel as though most of the downside is done in natural gas. It's a pretty slow mover at this point, so it's not something you'd want to buy like a leveraged ETF and expect it to go up. The leveraged ETFs almost work out like options where they lose value over time. So I think you'd be better. I like natural gas bullish long term, but I think it still could take a long time. You're talking 3, 6, 8 months before it kind of really bottoms and starts to move up anything significantly. But I am bullish on it. I think most of the downside has been washed away already.
What about the big natural gas find in Pennsylvania? I thought they had, starting in August, started shipping natural gas from the east to the west instead of from the west to the east. Has that changed at all?
To be honest, I'm not sure. I haven't paid attention to that.
You just pay attention to the price.
I follow strictly price. I don't follow too many individual companies. I just kind of follow what the commodities are doing because I trade basically ETFs or futures. So I like carrying a basket and rising a tide in or trading, big waves or a rising or falling tide in a certain sector versus trying to pick a whole bunch of little stocks that jump around with news.
And of course, they're fatalistic on coal. They realize it has seen its heydays and it's quickly being phased out.
Yeah, coal has been under pressure. Oof, man, it's a lot of people haven't probably followed coal that much, but it topped out pretty much with gold in 2011, and it has just been a bloodbath. There's a coal ETF, the sector ETF for it, and it's gone from $52 a share down to $7.80 a share. It's just continued to slide, and there's other energies that are really coming out and starting to take over. It's amazing. I've been doing some research on solar, and the amount of solar where I am in Ontario, Canada, is huge. It's amazing the amount of solar projects going up in residential roof systems and how much is getting put back into the grid. And, there's actually several countries that are actually producing more energy via solar and wind than they are through other means of coal and oil and things like that. It's amazing. So I think some of these dirty energies like coal are slowly going to get phased out and replaced with cleaner, more efficient energies.
OPEC says it expects higher demand will somewhat make up for lower oil prices. Will it?
Obviously, it will help, but right now there just doesn't seem to be any real demand for investment demand for crude oil. People just seem to be selling every bounce. They don't want to be holding it to the long side. We're seeing heavy volume on the down days, so people are still fearful of crude oil, of holding it as any investment. Until there gets to be some better demand numbers, I don't really see crude oil firming up. And again, I think we're going to see a big commodities washout here in the next 1 to 3 months. I think we're going to see the U.S. dollar skyrocket in value where people would never imagined. I think we could see a huge move to the upside, and that is going to completely annihilate commodities, the commodities market, which will definitely put some pressure on the TSX. We're going to see crude and silver and oil, all those gold, all those things down drastically. And I think it's going to get really ugly, but it's going to be the opportunity, I think, of a lifetime. You only get these opportunities maybe once or twice in a lifetime, and you can get extremes that I think we're going to see. And if you play your cards right and you save some money, you've got some gunpowder, dry gunpowder, when the time comes to invest. I think there'll be some big money to be made in 2016.
We'll have more with Chris Vermeulen right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Chris Vermeulen. Just before the break, you were saying there could be great opportunities if oil, gold, silver, and so on fall in price. Can you tell us how that works?
Yeah, well, obviously commodities have been in a correction phase, a bear market for several years, pretty much since 2011. Commodities continue to form bearish patterns. If you were to look at the commodity index as a whole, it's been doing is trading sideways for a little while, and then it starts another leg lower. And we've really we've seen the commodities index trade sideways here for about 3 months. 4 months sideways, and we're on the verge of breaking down to another leg to the downside. And I think we're going to see the U.S. dollar skyrocket in value. If you look at the weekly chart of the dollar, there's potential for the dollar to surge dramatically in the next 1 to 3 months, and that in turn is going to put more pressure on an already negative the commodities market, which everyone is negative on and continue to selling into. So we could get an opportunity that we might be able to see. This may sound crazy, but if things go to the extremes here, we could see gold wash out to about $830 an ounce. That would be some capitulation, complete panic washout spike low that could happen intraday. That's where some technical analysis is kind of pointing to that price. We might see silver dive all the way down to about $11 an ounce. And gold miners, they'll get clobbered and annihilated, but again, there'll be incredible buying opportunities for these commodities and resource stocks when we get this washout. The key is not trying to pick the bottom and losing all your money, and then when it bottoms, you wish you had the money to put in. So the key is holding and holding. You're way better to jump in a little late on the train than to jump in earlier and miss the entire move and watch it happen, and you just have no capital to do anything with it.
I've heard from some people, if you're going to try to invest in situations like that, maybe put 10% at a time in. Don't go all in at any time.
Yeah, and you know what? That's the key. If you're kind of a long-term investor and you see the market the way I do, long-term, looking out 4, 5, 6 years, you see the commodities market being a screaming opportunity to the upside, and you think it's going to bottom out here in the next year, that's the best way to do it. There's no point in trying to really time it, but you know, when you have these big sell-off days in the commodities market, every time it drops, 8 or 10%, you can pick up a little bit, and you pick up a little bit, and you accumulate. So that's the way to do it. That's the kind of the easy conservative way, and there's nothing wrong with that, and I do that myself. So it does work well.
If the U.S. dollar is going to skyrocket, does that mean the Canadian dollar is going to plummet?
Yeah, pretty much. As the U.S. goes up, we're going to see the Canadian dollar most likely fall fairly sharply, especially with crude oil. If crude oil has this big washout and drops more or less 25% from where it is right now, it's going to be a huge extreme. We could see $1.40, $1.50 exchange for the U.S. dollar, and it's going to be, haven't seen that in a long time. I remember when it was like that, and it could be like that again. And nobody, I don't think, was expecting this to happen. And it's usually what's least expected is what's going to happen.
And of course, for Canadians who buy all their produce over the winter time, paying Canadian dollars for U.S. produce from California and the other warm states, that's going to cost us a bundle, isn't it?
Oh, for sure. Yeah. There's going to be some groceries and all that stuff. Things are going to spike in value, and it's going to be very costly for us Canadians to have anything imported from the States. It's amazing how much it's affected people that I know who keep talking about it, and myself. It's just, you go to, being Canadian, it's so much cheaper to just go buy American stuff because everything is half the price as it is here. But now with the exchange and shipping, it ends up being the same expensive price as it is here in Canada. So it's good for Canadian sales. I think a lot more people are just buying in Canada and supporting our own economy. But, the U.S. exchange has definitely changed people's buying habits in Canada.
Yes, buy Canadian, it's cheaper. And also for U.S. border cities like Bellingham in the U.S., they depend a lot on business from Vancouver. When the Canadian dollar falls in price, you see the empty stores.
Yeah, for sure. Yeah. It's a big change, this whole currency shift. You know, it's amazing how fast these currencies are changing in values. It's just wild. And the percent swings are insane.
Do they kind of accelerate, the bigger the change, the more the change is bigger? If that makes any sense? Like an avalanche, starts off as a snowball, but it ends up as a huge, messy lump at the bottom of the mountain. The same kind of thing happens. I mean, once the momentum starts, it's hard to get a swing back.
Yeah, I think once people start to see these wild swings, it's almost like induced by more fear and greed. People start to pile in, and they can kind of help push things around, and that increases volatility. But I do think things are starting to get more wild, and people who aren't even attached to the financial industry, they're all talking about currencies and how quickly things are moving, and they're talking about currencies they've never even, people never paid attention to that much. So obviously there's enough volatility in the market that it's got general public people starting to think about it, look, and of course it's attractive for certain investors who are into, the Forex, all these Forex unregulated markets you can trade and stuff. There's some huge opportunities to be made, but again, currencies are a very different animal to trade. So,
is there any way to protect yourself from a falling loonie?
I don't know what the best way would be. The best would be to hedge with various investments. Obviously, not all Canadian investments. There's nothing wrong with holding international securities in different currencies, which is what I do. I own quite a few securities most of them actually in U.S. dollar, because I'm a firm believer the U.S. dollar is still the best currency, even though everybody's bashing kind of America and the currency and saying how rigged and how weak it is. Hey, it's still in a strong uptrend, and everybody wants to own America and have the U.S. dollars. So, why not hold your assets, your equities in U.S. dollar? So I hold the majority of it in U.S. equities right now. I
was going to say, yes, everybody's weak, but they're the strongest of the weak.
Exactly.
And that's usually never a bad bet to go and put your money on the strongest one. If gold remains below 1,100 for a long period of time, will we see another round of gold miners simply merging or going under?
I think we will. I think there's already been a big wave of gold miners, silver miners going under. A lot of just natural resource miners where silver or gold is just a kind of a byproduct. A lot of those companies have just vanished. So the supply has dropped off dramatically already. And if we see gold continue to get lower, it's going to be, we're going to see this incredible washout and drop. And there's only going to be a handful of really good opportunity stocks out there in the resource sector. It's going to be a screaming opportunity, but we just have to wait for that to happen. And, as much as I hate to say it, I would love to see $830 an ounce gold, $11 silver. I would love to be able to reinvest back at those levels and get into gold miners and various different investments based around that, because it's going to be an opportunity where you could make an easy, 100% return within, I think, a couple of years. If not, you're talking 500 or 600% return, which is the average for most miners once they start a bull market. So, just have to keep your gunpowder dry for another, probably 3 months or so. We're going to see this washout happen. If you can just sit tight and wait, I think the opportunity is coming. It's just, it always takes longer than you expect, and it may be longer than 3 months, but the opportunity is coming. And, as good and tasty as these low prices look for miners, I got a feeling they're going way lower, and there's going to be an even better opportunity.
It reminds me of that old poster of two vultures looking at the desert. Patience, my ass. Dinner is coming.
Yeah.
And really, that's the situation we're in right now.
That is it. Yeah.
Just
bleak,
don't.
But you got to wait.
And I was going to say, and just don't be that dinner on the way.
Well, that's it. If you buy in, you throw all your money that you're going to put towards resource or gold or silver. If you throw it all in right now, you are going to be toast. When those prices come, you'll be down, 30, 40% on your investment, and it'll be bottoming, and you'll be knowing it, and you'll be, why the heck did I do this? I could have got in. I'd double my money by the time I got back to where I am now. So you just have to hold back. There's no rush to pile into gold or silver. So many people are so worked up to get long, and I've had zero. I'm starting to drool at these low prices we're seeing today. And I sure hope we break these lows this week or next week, and we start to see the start of this washout low, because it's going to be awesome. And I hope a lot of people can follow suit and stick with kind of what I'm saying, because it makes a lot of sense on a lot of different levels, and it's great for short-term plays. It's great for long-term investment. There's a lot of ways to play this move that's just starting to unfold, the drop and then the recovery in the next few months.
Chris, thank you very much for chatting with us on Remembrance Day in Canada, Veterans Day in the U.S., and as I say, I'm grateful for what those guys and women did for us.
Yes, well, me
and,
too.
And continue to do.
Yeah, exactly. Well, thank you, everyone.
My guest has been Chris Vermeulen. His website is thegoldandoilguy.com. You're listening to HowStreet.com Radio. Our popular YouTube channel is Talk Digital Network. Find us on Twitter at Talk Digital Net. Comments or questions for the show can be sent to info@HowStreet.com. Grateful Remembrance Day. I'm Jim Goddard.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.